This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, February 17th, 2016. Euro dollar. So despite recent setbacks in the euro, we still can't rule out the possibility of additional upside at this point, while the market holds above that previous resistance and breakout level at 110.60. While the market holds above 110.60, there is still risk for additional upside beyond the recent highs that we saw at 113.77 and towards the 114.10 measured move objective further up. At this point, only a close back below 110.60 would take the immediate pressure off the top side. Sterling dollar. So this latest breakdown in cable does suggest that we could be seeing a lower top at 146.68 in favor of the next major downside extension below those recent near 7-year lows at 140.80. At this point, only back above 146.68 would negate that outlook and open the door for additional corrective upside in the pound. Dollar yen. So dollar yen gains have stalled out into Wednesday, and the market is now potentially looking for a lower top in favor of a bearish resumption below those recent lows that we saw, those multi-month lows at 110.98. At this point, any rally should continue to be very well capped, and 115.97 represents some previous solid support now turn resistance. Euro Swiss. So Euro Swiss continues with its recovery outlook as the market holds above some previous resistance now turn support at 109.40. Overall, the upside is favored with a break back above recent highs that we saw around 112 towards the 114 area further up. Any setback should continue to be very well supported into the 109 area, while ultimately only back below 107.15 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie continues to show signs of stalling out, with the market looking to roll back over towards those recent multi-year lows at 68.27. At this point, rallies should continue to be very well capped ahead of 73, while only back above 73.85 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has done a good job being supported in recent trade, though the market is still hovering just over some critical rising trendline support off those May 2015 lows. At this point, don't rule out the possibility for another pullback towards that trendline, which comes in around the 135.50 to 136 area, while ultimately only back above recent highs at around 140.17 would negate that prospect and suggest the market is poised for a bullish continuation back towards the 146.90 recent near 13-year high. Dollar CAD. So Kiwi dollar. So Kiwi dollar continues to be very well capped into rallies, with the market looking like it wants to stall out ahead of 68 in favor of the next downside extension. Key support now comes in at 63.47 further down, while any rally should continue to be very well capped ahead of 68. Ultimately, only back above 69 would compromise the bearish outlook for Kiwi dollar. SPX 500. So the S&P 500 has seen a bit of a correction out from those recent multi-month lows at 1808, and any rally should continue to be very well capped, with the structure now shifting and favoring the downside following that critical break of that previous August 2015 base, which came in around the 1830 area. At this point, rallies should be very well capped up towards the 1940 area, while ultimately only back above previous support at 1993 would compromise the bearish outlook for the S&P 500. Gold. So gold has seen a bit of a pullback into the early week, though the recent break above 1192, which was some medium-term resistance, was a significant development and now confirms the possibility of a structural shift out from those recent multi-year lows at 1046 from late 2015. This opens the door for additional upside in this market over the coming days and weeks towards next key resistance in the form of the 2015 high from January at 1307. At this point, setbacks should be very well supported in the 1160 area, while only back below 1100 would ultimately compromise the newly adopted bullish outlook for gold.